Bitcoin might be dumping, but it didn't stop BlackRock from sending its latest Bitcoin warning. Yesterday, they came out with their new 2% Bitcoin allocation, and this kind of got Opti and I thinking today. When the world's largest asset manager speaks, people not only listen, but they actually start to deploy their money. So today we're going to be looking at what might happen if 2% of the world's $900 trillion was actually able to make its way into Bitcoin. Hint, that number and that price tag per Bitcoin, it's kind of going to be ridiculous. Opti, do you want to jump?
Yeah, Luke, before we get too bullish here and drop all the numbers, before we get ahead of ourselves, let's watch the clip that BlackRock dropped accompanying this 1 to 2% portfolio allocation. And it is a little bit of a cliffhanger, but it does do exactly what Luke said. It is a stamp of legitimization. We have gone from just a purely speculative asset to you need this in your portfolio. It's no longer a if you should, it's more a how big and how much you should add to your portfolio. So here's the quick clip, and then we'll get into those numbers for you.
For decades, investors have relied on traditional assets, stocks for growth, bonds for stability. But just how much Bitcoin exposure belongs in a portfolio? The BlackRock Investment Institute has found that a modest allocation could potentially have an impact on portfolio returns without dominating day-to-day risk.
So, Luke, first off the rip, taking the Band-Aid off, again, it's no longer an if you should add it to your portfolio. It's a how much you should add to your portfolio. And that's where we get some bullish Luke math here. So, look, let's go to, actually, Luke, you said it was your base case here. And I'm like, no, that's the bull case here. So what are these numbers we're talking about, Luke?
So let's break it down. Again, the biggest mistake that most people make when they start running maths surrounding what price Bitcoin might be in the future, if it captures XYZ dollars and trillions, is they forget about the multiplier effect. Today, this is somewhere around 6x, and this has actually been rising for the past 5 years. So this means that for every $1 that wants to flow into Bitcoin, this pushes the market cap up by 6x. So what's interesting, we got $900 trillion of wealth in the world. Today, Bitcoin's around a $1 trillion market cap and sinking like a rock at the time we're recording, but it's got a $1 trillion market cap. Now, if 2% of the world's money wants to flow into Bitcoin, you can see how much capital will be pulled from each market. This would be about $1 trillion from the sovereign wealth funds, $3.5 trillion from the asset managers. This would represent somewhere around, $16 trillion from the real estate market. All you guys need to know is if you add that all together, it would represent $18 trillion of demand coming for Bitcoin. And this is where most people go wrong, because we have this 6x multiplier effect. So when you account for the fact that not all Bitcoin's available for sale, then Bitcoin works out to be worth somewhere around $108 trillion of market cap. And this gets you somewhere around 5.2 or $5.3 million per Bitcoin. And this is just if 2% of the 900 trillion wants to flow into Bitcoin. I think a little bit later on, we're going to have a look at what might happen if 20% of the capital in the world wants to flow into Bitcoin. And we're also going to challenge that assumption. So many people assume that global wealth is just going to continue expanding by 1 to 2% per year. Everybody thinks, okay, because that happened in the 1800s and the 1900s, that's just how the world works. And that's what's going to happen into the future. But I think a lot of people are not considering what might happen to global wealth if we are living through the biggest technological revolution that we are, all aware of. That's getting a little bit ahead of our skis. Opti, what are your thoughts on the $5 million price tag?
Well, as I always say, I might be one of the most bullish Bitcoiners. I am a perpetual bulltard, and usually I am no match to Luke. Every time we talk, we do a stream, everyone knows I'm bullish. I might be naively bullish half the time. And then I talk to Luke and I'm like, yo, I'm not bullish enough. And we argue every morning. I'll give you, you know, like where I see right now. And you're like, you're just not bullish enough, Opti. You are not bullish enough. I'm like, look, I am bullish. I'm as bullish, if not more than most people. And then there's Luke, and he's just like head and shoulders above everyone else. And he's just like the literal bulltard out there. Obviously, I think that realistically, it will happen. I don't think it's an idea of if it will happen again, even the BlackRock kind of idea. I don't think it's an idea of if it can go to those numbers. It's really more of a when it will go to those numbers. And when we were talking about this morning, I was like, yeah, you know, I don't know, Luke. Like, that might even be a little too crazy for me, because Luke was saying 5.3 mil. You're like, yeah, I think it's going to get there by like 2035. I'm like, yo, you're stupidly bullish. Like, I was more of the idea, like, maybe in my lifetime we might get to those numbers. And Luke's like, no, dude, 10 years, we're going to be at $5.3 million. And I'm like, okay, all right. Now you might be getting a little too bullish for me. But there is a point here, you know, as Nico loves to say, that Luke buried the lead here. And the idea is basically, look, if BlackRock is recommending 1 to 2%, they basically just set the standard for every other asset manager. So even though when we're talking about this, like my base case when I saw this number was, you know, 2% of $17 trillion, which is what BlackRock basically manages, that would be somewhere around $350 billion. And Luke's like, no, dude, but you got to add the multiplier effect. And I'm like, okay, so that would be essentially the entire market cap of Bitcoin right now being added just from BlackRock, you know, retail investors, just from the assets that BlackRock manage. That would be, you know, a simple 100x gain here, you know, potentially overnight. Now, obviously, that's being hyperbolic. It's not going to happen overnight. This is going to happen over, you know, the next year or two or so as the investors start to get a little more familiar with Bitcoin. But the idea of Luke saying, yeah, but it's not just going to be BlackRock that is talking about adding 2% to their portfolio. It's going to be every asset manager now. And we saw what happened when BlackRock got into the ETF game. It set off the institutional wave of Bitcoin. And even though all of us here are obsessed with Bitcoin, and I guess actually, yeah, Freudian slip, upset with Bitcoin right now, we've seen how much the Bitcoin, I guess, mind share has grown in the past 2 years. Yes, it's not happening as fast as maybe we would like to see it happen, but in terms of institutions and how slow they actually move, because they have to do the research, they have the, you know, fiduciary responsibility. Like, they have to be 100% sure that this Bitcoin thing's not going to go away. They have to do the tests, they have to do the research, they got to get the education in line so that they can actually show this to their customers. 2 years is actually pretty fast in the evolution of how Wall Street is taking Bitcoin. Remember, you know, BlackRock ETF launch in January of 2024. Now we basically have every single bank in the world, at least I would say world, but of course it's America. The only world that matters to me is America. Obviously, you know, I'm an American centric person, but we have all the big banks in the world now basically all saying, hey, we are either going to launch a Bitcoin product or we are in the works of launching a Bitcoin product. This morning, Luke, I don't know if you saw, but Charles Schwab is officially trading Bitcoin this morning, one of the biggest trading houses. We have, you know, JP Morgan, Wells Fargo, Morgan Stanley, BlackRock, like everyone is basically trying and vying to get a Bitcoin product. So it does extend to every asset manager, which obviously, as Luke is saying, it extends to the global capital markets. And remember, it's about what, $1,000 trillion or $1 quadrillion. So 2% of that, I don't think it's too crazy to say, Luke. Again, it's not an if it will happen, it's a when it will happen. And that's the real conversation, I would say.
Yeah, well, that's the big picture here. It's not just BlackRock anymore. It's Morgan Stanley recommending 2 to 4%. You mentioned Charles Schwab rolling out Bitcoin trading. They also recently came out, wrote a report, and they said, look, for aggressive allocators, a 22% Bitcoin allocation isn't outside the realm of too risky or too unbalanced. We also have, I saw this article drop a little while ago, we can see they called it Wall Street's move to 5% Bitcoin allocations. And they cited that it's not just BlackRock, it's not just Goldman, it's also Merrill Lynch. Morgan Stanley and Merrill Lynch are recommending 5% Bitcoin allocations. And this is the big thing that everybody misses. They're like, all right, it's 5 banks in America talking about $1 million Bitcoin. Why do I care? I've still got 99.999% of people that I know in my physical life. They're not buying coffees with Bitcoin. They're not saving in Bitcoin. They think it's too volatile. They think it's funny internet money. But what everybody misses is we don't need the masses for $5 million Bitcoin. We only need the people who control the money for them to actually say, I need Bitcoin. I need a 20% allocation in my portfolio. That's going to create an outsized return on what happens to the Bitcoin price. And this is kind of where I don't want to get into talking about models too early on, but if you look at like Bitcoin's 18-year history, we've only had the institutions for 6 years. We don't know what another 6 years of them buying Bitcoin, like BlackRock and the ETFs currently have 5% of the Bitcoin supply. We don't know what impact that's going to have on the Bitcoin price over the next 6 years if they continue buying at the same rate. And the same said for Saylor. I think a concept that I've been dicking around with is this idea that scarcity, it's non-linear. And BlackRock and Michael Saylor accumulating 10% of the Bitcoin supply over the past 2 years. A lot of people have been lulled into this bearish ideology. And they're saying, oh, the institutions don't matter. Price has done nothing for 5 years. So that means the supply shock is impossible. It's never going to come because the people talking about the supply shock, I don't know where this idea came from, but Giovanni thinks that coins exchanges translate.
Wait, I knew we were going to go here. Sorry to cut you off. I knew we were going to go here. All right, Luke, sorry. Rewind.
Took us 12 minutes to get here. a lot of the model promoters, they say, look, coins have been leaving the exchanges for 6 years. Price hasn't done anything fantastic. That means the supply shock is not a thing and it's not real. But I think that's a massive straw man because you can't measure a supply shock when you've still got Bitcoin available on an exchange and compare that to what the Bitcoin price might do. I have no idea, but my suspicion is it's going to behave in a very different way when there's no Bitcoin left on the exchanges. And if the current trend of supply suffocation continues into the future, we're going to be looking at a very different world by 2029 or 2030. Opti, do you think that things are going to change? Do you even think, because some people challenge the idea that there will be zero Bitcoin on the exchanges, do you even think that's a possibility?
Well, I think I would be on the opposite side of you. I do kind of fall in the camp of the idea that there most likely won't be zero Bitcoin on exchanges per se, at least for a long time, because I'm always of the idea, look, all right, I do believe at a certain point, if we find a frenzy, if we find ourselves in the midst of a retail and institutional frenzy, that the Bitcoin on exchanges will be depleted to numbers we've never seen before. I agree with that idea. Now, the zero Bitcoin on exchanges idea, I have a harder time really locking in on that idea because I'm always thinking, look, if the price is high enough, there will always be people sending Bitcoin to the exchanges, but maybe their reserves will get to a point where it's really insignificant. You know, if the exchanges, you know, say it's like Coinbase, you know, or rather, what's the number we have right now? About 2.5 million Bitcoin on exchanges. Okay, well, we'll just use the total number. It's fluctuated between, you know, 2.2 mil to 3 million, depending on what the metrics are and, you know, what the label for those Bitcoin on exchanges means. A lot of people do, and me and Luke have had this argument off stream before, where it's like a lot of the on-chain analytics people have this idea. It's actually split in half. There is the camp that says, oh, the Bitcoin that BlackRock has and the Bitcoin that MicroStrategy has, they're counted in those figures. So that's where you get the 3 million figures. And actually, you know, to this point, Luke, you know, we've got a little more data. Maybe they were a little closer to reality, considering that Saylor has been selling a little bit of Bitcoin and saying we might sell some more Bitcoin. So I was more of the camp that, oh, those Bitcoin are gone. You know, the Bitcoin that BlackRock has, the ETFs and the Bitcoin treasury companies, those we can kind of consider off the market. So the Bitcoin on exchanges number is inflated. So even if we take that out, it's what, 2.2 to 2.5 or 2.7, depending on what the numbers really are. If those numbers do get depleted to like 50,000 Bitcoin, then I think we are in a totally different game. Like it's a totally different ballpark. Does that mean that the exchanges have zero? No, but it's something we've never seen before. If we do see significant amount of Bitcoin leaving the exchanges, then it's a, you know, like that would be just the narrative driving liquidity or the narrative driving price would imply that everyone is starting to realize scarcity, starting to realize the supply shock is happening. And whether it really is or not is, I think, besides the point here. We all know that if you're a hater, if you're a Bitcoin hater, you just look at the Bitcoin narratives and you're like, this is based on hot air. It's just based on narratives. And we're like, well, you know, Bitcoin, the network has fundamentals, but we all know the price is driven by narrative. And the better the narrative, the higher the price will go. So let's see. What are these the latest numbers?
So this is some of the Bitcoin on exchange
Okay,
data.
so 2.3-ish million.
Yeah, it's tough to get up-to-date data on this, but it doesn't matter what data set you look at. The trend is the same across all of them. Some data sets say that there's like 1.9. Others say there's like 2.7. There's a really wide range on it. But the trend is your friend across all of the data sets that I've got my hands on. And it's kind of, some people say you can't really, it's a lot more difficult to measure the OTC desk. And I kind of understand that argument. But even if you look at that data and how it's tracked, probably a little bit more sketchy than the spot Bitcoin exchange data. But even the OTC desks has been trending down since the same time period that the number of Bitcoin on spot exchanges has been trending down. 2020 changed everything. That's the thesis. And I just think the 12 years of data from 2020 to 2032, I just think, could be wrong, but I think that's going to be radically different to what we saw between 2008 and 2020.
Yeah, no, I'd agree with you. And obviously, this is part of my bullish thesis where I think Nico and I really differ on what we think is going on with the current Bitcoin price. Nico, and I'm not here to, you know, make fun of my partner here, you know, of my co-host here, but he is part of the camp, like a lot of Bitcoiners that just think, hey, nothing is really fundamentally changed in Bitcoin. 4-year cycle is going to play out. You know, the models may have broken. There's maybe a bit of a sea change, you know, but overall, Bitcoin's going to do what Bitcoin does. And I think, Luke, you and myself are more in the camp of, no, things have changed since 2020. They changed in 2024, they changed in 2025, and they are in fact different now in 2026. And it's because of all the institutions. It's because of the Bitcoin treasury companies. And like you said, wait, which way? Sorry, wait. I can't do the mirror thing here. I always mess up. But the trend is our friend here, right? The amount of Bitcoin that the ETFs are buying. And we have seen some outflows, you know, with that caveat, the amount of Bitcoin that we've seen from the Bitcoin treasuries, and there's new, you know, Bitcoin treasuries coming on the block. You know, the game is starting to change. We have Strive that is acquiring a bunch of Bitcoin. We have Strategy still trying to acquire more Bitcoin. I don't know if you guys saw, but Bloomberg did a hit piece on Michael Saylor this morning, basically saying, if Saylor wants to protect MicroStrategy, then they should stop buying Bitcoin. So you're starting to see the hit pieces come up. And then what most people are missing, and maybe we'll talk about this tomorrow, but so I'm not gonna, you know, blow the secret here. If you are in the know, if you know, you know, but we are going to see another massive Bitcoin treasury company essentially come online this Friday. And if the numbers that I'm seeing is what's going to happen, they're going to be buying tens of thousands of coins. So the trend is our friend. And Luke, I know you're pulling something up, but I did show you this morning, and I think it might be a good time to pull this up right now. But I saw this tweet, And I know our audience in particular, I know the Bitcoiners at large have this view that, look, we don't need the Bitcoin treasury companies. We don't need the ETFs. They're just, Bitcoin wrappers on top of it. We need people holding Bitcoin in self-custody. And I agree. I forget what they're calling us now, fundamentalist. It went from maximalist to now I'm a Bitcoin jihadist or whatever, Bitcoin fundamentalist. I don't know what they're calling me now. I might have to I might have to censor that one. I might have to cut that one out. But this metric, or rather this meme, it's Meme Wednesday. Shouts out to, who is this? Where'd it go? Where'd it go in my? Okay, here we go. Shouts out to David Ang NBA, managing partner. I have no dude. Bitcoin Power. Oh, he's a Power Law guy. But he's my quant for today. Okay, he goes, who's really driving Bitcoin? ETFs have bought 1.2 million Bitcoin since launch. MicroStrategy has bought 847,000 Bitcoin. ETFs are the main driver of incremental demand, but MicroStrategy's consistent buying is helping support the floor. Without that demand, Bitcoin would likely be 5 to 8K lower right now. So that would be, I don't know what the price is right now. We're like 58K. So under 50K, maybe. I don't know what this P10 floor number is, but he's saying the P10 floor provides a strong setup. And it is an idea that I've basically been saying for a long time, that yes, we need more adoption. We need more people holding Bitcoin, because that's what keeps the Bitcoin price continuously trending up and to the right. But what really drives the big omega candles, what really drives the aggressive moves up, is having the deep pockets, having the rich people come in and buy Bitcoin and wanting it right now. That's what really causes the price to go up. And you can see they are working in tandem. The ETFs came in strong. They have the deep pockets. They haven't fully gone 20% into Bitcoin. They're maybe at 1 to 2%, maybe even less than 1% of capital from Wall Street entering Bitcoin. But as we've seen, it's a significant amount of capital compared to all of us plebs just DCAing. And then we have Saylor that is buying continuously, which is essentially setting the floor, and the ETFs are driving it up. Saylor said recently, hey, without the ETFs, we wouldn't have hit 100K. And I know a lot of us don't really like to hear that, because we have this bad feeling, bad taste in our mouth about the institutions, but it has led a new demand from an outside market, which is obviously not just Bitcoiners, not us Bitcoin maximalists. So we're seeing that is the case. So if we see this demand continue with the multiplier effect, maybe we are going to see the amount of Bitcoin leaving the exchanges to levels we've never seen before. And does that necessarily fit the description of a supply shock? I would say yes, but does that mean we're at 0 Bitcoin on exchanges? I'm like, I don't know. I mean, if we do get a frenzy from retail and we see the institutions everyone go 2% into Bitcoin, we all know there's not that much Bitcoin to go around. So I don't think it's too far-fetched of an idea, but I just have a hard time thinking we will see 0 Bitcoin on exchanges, because at a certain price, there's always a Bitcoin seller. Now, most of us probably have like million, 10 million, whatever Luke's big number is going to be at the end of the show. Starts with the B. Maybe that's your price point, but there will always be a seller, or rather a user of Bitcoin. So I don't think we'll get to 0%.
So I think I'll counter you, Opti. I think we're going to get to 0. And then the next day, there's going to be 10,000 Bitcoin on the exchanges.
Okay, I could see that. I could see that.
And then you're going to see 0 again the day after then. And then you're going to see 5,000 Bitcoin dumped on the exchanges. Then it's going to go back to 0. It's going to have 2,000 Bitcoin back on the exchanges. There's always going to be a seller, but the higher the price that Bitcoin goes, the bigger the buyer that's unlocked. Yeah. This is the big kind of misconception that there is in the Bitcoin space. Bitcoin's a Veblen good. The more that market cap grows, the safer and the more de-risked it becomes. Right now, Microsoft can't buy Bitcoin. Bitcoin's too small for Microsoft. It's as simple as that. These massive companies, they can't take a 10% stake in Bitcoin because they have too much capital. But when Bitcoin gets bigger, once it goes from 10 trillion to 50 trillion to 100 trillion to 500 trillion, then the higher the price goes, the more that retail will sell. People who bought Bitcoin very early, they're probably going to take some chips off the table. We think selling's a terrible idea, obviously, but they're going to sell anyway to de-risk, get money out of the system, and this is just going to unlock a bigger buyer on the other side of the transaction. I just think that's how it's going to go. And I think what's really fascinating, I want to pull up the price right now, Opti, because we are getting a discount right now. Again, this is kind of we're going to talk about some really silly numbers later on in the show, but it does not matter whether you buy Bitcoin for $59,000 today or whether you buy it for $69,000 or even $55,000. Who knows? Maybe we go a little bit lower. I think in 3 years from now, you're going to be incredibly happy with the Bitcoin that you buy today, and you're going to be incredibly pissed off with yourself if you sell Bitcoin at the bottom like Dave Portnoy. Not do that, guys. Buying opportunity. No pain, no pleasure. I love that comment in the chat. And I think BlackRock's laid down the gauntlet. That's what I think we're going to see. And I think you mentioned something about the multiplier effect there, Opti. If we get it to a world when there's less and less Bitcoin on the exchanges, I actually saw Fred Krueger. Yeah, well, I won't say anything, but I did see a really interesting analysis that he ran a little while ago. The numbers I remember off the top of my head is that the closer you get to zero Bitcoin on exchanges, the higher and the faster the multiplier effect rises. It is, again, it's non-linear. It's an exponential process. And even if you look at the 2-year moving average of the multiplier effect, we might bring that up after the first break, Opti. I'm going to go find it for you guys. But you can see it's kind of like slowly started increasing from 2.5x in 2020. And it's kind of like ramping up a little bit in 2024, 2025, 2026. So I think if we get to a world where there's zero Bitcoin on the exchanges, like, do the math. 30% of the supply has gone over the past 6 years, and the multiplier effect's gone from 2.5 to above 6. So it's nearly 3x'd. What happens if another 30% of the supply moves off the exchanges? Does the multiplier effect 6x? Does it go from 6 to 36? I don't know. Nobody does. But I think the idea of Bitcoin scarcity being non-linear, it's something that so many of us, especially everybody who joined Bitcoin post 2020, kind of have PTSD about. They've heard this narrative for 6 years. Supply shocks happening. Michael has 800,000 coins. Larry's got 800,000 coins, but the price has done nothing in the past 6 years. And I think next 6 years, let's just say for now, things are going to get really interesting.
Yeah, and also we do have the research. I think it was Galaxy Research. We covered this, I think it was over a year ago, where the multiplier effect, we know for a fact it does fluctuate. I think it was, on average, it's about 4 to 6%. And then we've seen in bullish scenarios, it goes as high as like 8 to 22 times. So look, I've got yelled at in the past because I was using the bullish multiplier effect. It was like, it's really closer to 6. I'm like, okay, I mistake some of these numbers, but we do know it fluctuates from about 4 to 22 times for the multiplier effect. For every dollar, it adds anywhere between $4 and $22 to the market cap. And that's kind of what we're talking about. But Luke, I do want to keep the show going because I want to keep everyone here. And we're going to get into like Luke in the most abstract bullish sense towards the end of the show. But give them a tease. What would be the number? And you said you were going to bring it up. Or unless you want to wait for it, unless you want to keep people here, what would be the number if we saw 20% of world capital enter Bitcoin?
I'll give you a different answer.
What a professional.
I think, so before we actually do the maths, the biggest misconception that most people aren't paying attention to is we are living through something that we've only seen 3 times in human history. We're moving from the industrial age to the information age. Everybody understands this from first principles. Look at every single aspect of our lives. It's being digitized. We're very clearly moving into the digital age. The last time we saw one of these macro transitions, it was in the 1770s. We moved from the agricultural age, which we spent 10,000 years in, and we moved into the industrial age in the 1700s, 1800s. That transition, that actually increased global wealth by a factor of 100x. So the wrong question and the wrong framing is, okay, can Bitcoin become digital gold? Can it get to $30 trillion of market cap? Or can it become digital collateral? Can it back the bond market and maybe become a $100 trillion asset? The correct framing is monetary history is an all or nothing transition. Technologies that are a 100x increase, they are an all or nothing transition. And if global wealth does another 100x, like we did moving from the agricultural age to the industrial age, the real question is, Bitcoin's not chasing a sliver of the $900 trillion of wealth in the world. Bitcoin is going after a large majority of a global wealth pie that could be 9 quadrillion, or even if we get 100x, $90 quadrillion. And those numbers, as you're going to see, they kind of mean some really crazy things for Bitcoin. I'll leave it there.
Okay, all right, okay, Luke. Okay, let's put some cold water on the chat here, and we're gonna play our first ad. There was a good clip of Matt Cole from Strive. The clip does talk about Bitcoin treasury companies, but I think he dropped a little nugget of where we are in this current cycle, where the bottom might be. And I haven't had Luke on the show for a while, so we're going to get, Luke's take on where we are, and then I will kind of, compare the Strive clip from yesterday to where we currently stand right now. And then again, the end of the show, Luke, if you think he got bull-tarded now, if you don't like Luke's bullishness right now, just wait till the end of the show. It's going to get absolutely ridiculous. The numbers are nuts. I've heard this spiel once or twice before. And as I told you, I think weeks ago, it's been like herding cats trying to get Luke on this show. So that's what we're going to do on today's show. I will be right back, and we will continue Simply Bitcoin Live. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. All righty, guys, we are back, and the current Bitcoin price is $59,590. Look, we're talking about 5 million, and we're almost at 58K. Crazy show today. The discount from all-time high is 52.8%. The market cap, dude, we're under 1.2 trillion, currently 1.19 trillion, and the block height, TikTok next block, 955,201. Okay, guys, so do the math, haters. Yes. All right.
Love this comment.
Yeah. So we did the BlackRock special. How much capital can potentially hit Bitcoin very soon? We're going to do the how much capital Luke thinks can potentially come into Bitcoin in our lifetimes. But there was I think a very good Matt Cole clip yesterday on Bloomberg. I believe it was Bloomberg. So shouts out to Bloomberg. And the question was, again, like I said, framed around the Bitcoin treasury companies. And you might not be the biggest fan of it. I get it. But there was a little tidbit here. And as of yesterday, it was holding up a lot longer than it was before the show started. You know, I like got the show ready. I'm like, oh, okay, we got a banger. I want to tee Luke up for where he thinks the bottom is. Did we bottom already? So I'm going to use this clip. And then now, in fact, we're at 59K, which is a little lower than we thought it was going to be when we started this show. So let's play the clip and then we will chat about it.
Yeah, it is still early days for the overall, what you call DAT ecosystem. Most importantly, I do think it's working in the instances of both strategy and strive. And you might say, how is it working? Your stocks are underperforming Bitcoin. And I would say that is by design. That is a feature, not a bug. Our common equities are designed to amplify Bitcoin exposure. Right now, you mentioned Bitcoin's at $62,000. That is literally at the 200-week moving average, which historically has marked near the end of a Bitcoin bear market. I think the underlying fundamentals of Bitcoin are strong, probably never been stronger. And so amplified Bitcoin exposure is great. Strive has been buying Bitcoin hand over fist in the midst of this bear market. You have up here, we have almost 20,000 Bitcoin. Remember, last fall, we had 5,000 Bitcoin. We've almost 4x'd our Bitcoin's holdings. Our digital credit product is working really well, and I'm looking forward to probably talking about that with you also today.
Okay, so the tidbit was the 200-week moving average. And you guys know I've been talking about it for a while. Well, when this aired yesterday, it was, in fact, holding up above the 200-week moving average. You can see here today, we actually broke under, which is not necessarily something we've never seen before in Bitcoin. But even with this kind of dump this morning, you could argue 62 to 59 is not really a dump. What is this, a dump for ants? But historically, even if it does break, and you can see here it's in blue, if it does break under the 200-week moving average, it doesn't stay there for too long. The only exception was, of course, 2022 and 2023. And as Luke pointed out to me, had to remind me, that was FTX. We have not seen an FTX scenario yet. And then zooming out a little more, we are still above the 50-month moving average, which, again, historically doesn't stay under that long, except for, of course, the FTX debacle. So we are right on the 50-month moving average, slightly under the 200-week moving average. So, Luke, oh, did I lose Luke? No, oh, no, he went off screen for a moment. Luke, this is where I ask you. You haven't been on the show in a while. Again, impossible to get you on the show. You are Mr. Bitcoin nomad going to all the conferences. Where do you think we are? I know me and you are more aligned on maybe we already saw the bottom, but it's funny, like the two most bullish content creators that I know, when we start getting a little scared is when Nico starts getting bullish and we're like, uh-oh, maybe we are wrong. I don't know. So, Luke, what is your thoughts right now with the current price action with 60K the bottom?
Obvious caveat needs to go out.
Not financial advice, financial entertainment.
Exactly. Short-term price predictions, nobody has any flippant idea. For me, if I had to put probabilities on it, gun to my head, probably say like the chances that we go into the 40s, probably less than 5%. Not saying it's impossible, like a scam wick to 48 to really scare people. I think it's a 2 to 3% chance. But I think if like you just look at so many factors, we would need to see some sort of black swan to push Bitcoin into the 40s.
Yeah.
We're 59 right now. So for me, I like to keep it simple. We've been in a bear market for 8 months. We're down about 60%, 55% from the all-time high. Like, I'm a buyer here. The maths is asymmetry. If you think Bitcoin's going to zero and it has zero value, then sure, you might be like Mike McGlone and thinks it's going to $10,000. I just think that's very unlikely. And so for me, that's kind of where I stand on the short-term price action. We all know that money printer is going to have to burr. I think that's, and I just think it's.
We lost your camera, bro. Did it shut off? Overheated.
I can fix that. I think I'm giving the people a blessing by not showing them mug it.
Yeah, dude, they're tired of your hair, dog. Hold on. Why you fix that? Down Under Blues goes, well, we are below 60K, so that's not the bottom. okay, you know, 59K, 60K, whatever, dude. Basically the bottom. I have been saying that maybe the bottom, it goes, personally, I think maybe like low 50s is probably where we will see the final capitulation phase, which in fact might be happening as we speak. But the 30, 40K, I've even seen people say 20K. I'm like, guys, like, I can't believe everyone thinks Bitcoin is dead right now. Like, what are we doing right now? So I think we, as I've been saying, and again, I could be wrong. What'd you say, Luke? You know, short-term price predictions is everyone has one and they're usually wrong. That's a nice way of putting it. But I think we are closer to the bottom price than a lot of people expect. A lot of people keep saying, you know, oh, 30% more. That means 38K into the 40s, et cetera, et cetera. I'm kind of the opinion based on what my fundamental thesis is, which is the ETFs and the Bitcoin treasury companies that are buying a lot more Bitcoin than all of us Bitcoiners combined, because remember, we're broke in comparison to Wall Street. I think we are probably closer to the bottom. Does that mean that the pain is going to necessarily revert? Are we going to see a V reversal here? Who knows? But I think price-wise, we're closer to the bottom price. In terms of time, we're still going to have to, you know, survive through the summer. I think that's probably where we currently stand right now. But anyways, how about I hit the ads, Luke? You get your camera ready, and then we do literally the most bull-hearted Bitcoin segment that probably will ever be recorded on YouTube. So we'll be right back after a quick commercial break. And then Luke is going to unleash what some of you are calling probably the stupidest bullish Bitcoin predictions. And I would agree, but stupid as in cool. All right. All right. That's where I disagree. We'll be right back.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey, and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life. Not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing. And no single point of failure that can lock you out of your Bitcoin forever. What really stands out about Bitkey is the peace of mind. Recovery is built in. Inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using Bitkey. Go to bitkey.world and use promo code SIMPLY for 10% off your new Bitkey. That's bitkey.world, promo code SIMPLY. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or HIVEdigitaltech.com.
You secured your Bitcoin, but did you secure your devices too? They're still broadcasting your location and digital footprint. GPS, Wi-Fi, Bluetooth, cell, 5G, EMF, all of it is leaking. Escape Zone fixes that. Their Faraday bags block every signal your device emits, so you decide when you're detectable, not the grid. Built for Bitcoiners who know sovereignty isn't just your wallet. It's your phone, your hardware wallet, your keys, and your entire digital life. Go to escapezone.com/simply and use code SIMPLY for 10% off. That's escapezone.com/simply, code SIMPLY. All righty then. Wait, I'm not Luke Mikic. Luke is still, I guess, figuring out his camera. But before I get to that, I do want to read Down Under Blue's comment here. I think this is probably the wisdom that you should keep in the back of your head. You don't get rich in the bear market. You get rich from buying the bear market. Guys, this is what we keep saying. If you've been in Bitcoin for longer than one cycle, if you didn't buy the top in 2025, and this is not your first bear market, everyone knows how the game goes. That you buy in the bear market, you accumulate as much as possible. You sell your chairs, you sell your car, you sell everything that is not nailed down to get as much Bitcoin as possible. Make sure you're able to pay your rent and eat food and survive. And then in 3 years, you look back and remind yourself that that was the best move you could have ever made. All right. Okay, Luke. Now, again, caveat here, disclaimer here. If you thought Luke was bullish in the first segment of this show, you might just think that Luke is actually an idiot here because he's going to get so bullish that the numbers get crazy, all right? So I'm saying that on the onset here, or the outset, excuse me, of this clip. Because Luke, everyone actually, we got a good comment earlier on Rumble. So I think this is the best way to tee this up from my boy C-Suite. Let me see it. Let me find it here. He said something like $5 million Bitcoin. I thought Luke said $7 billion Bitcoin at one point. So Luke, let's get into it. Yes. What is the, complete moonshot, the most bullish case possible from Luke Mikic in terms of where Bitcoin can go?
I didn't even bring my slide for most bullish to scare people. But let me work through the logic so people don't start hurling tomatoes at us. So like I said earlier.
At you. I'm okay today.
I'm throwing you under the bus with me. I'm not going down alone. All right. So this is the chart. I made this. So this is looking at wealth per person over the past 10,000 years. You can see it basically didn't change for 10,000 years. Wealth per person was $400, 10,000 BC, 10,000 years ago, 12,000 years ago. But in the year 1700, wealth per person was $600. Basically didn't change. But when we moved from agricultural age to the industrial age, we basically got a 100x. You can see the 38 most advanced OECD countries. These are the ones who most industrialized. Their average wealth, it's $36,000. So that's practically a 100x in global wealth. And my thought experiment is, okay, what happens if we get another 10x or 100x moving forward into the future? So I started conservatively. If global wealth just expands from 900 trillion to 9 quadrillion, that's a 10x in global wealth. And what we're looking at then, you can see very clearly, this maths is actually incredibly bearish. But if Bitcoin captures half of the wealth in the world, again, we've got 5,000 years of monetary history to show us that the dominant store of value captures the majority of the money looking to be stored in money. My base case is Bitcoin's going to capture half of that. So even if you use the conservative current 6x multiplier, you can see you get a market cap of $26 quadrillion for Bitcoin. And that would work out to be a Bitcoin price of about $1.24 billion. So you guys can see pretty clearly, if we get a 100x in global wealth, not a 10x like this slide shows. Again, this is my conservative calculations. things get even more wonky. And then, of course, you need to factor in the fact that the multiplier effect is going to expand massively. Huge. Like, it's going to be so much higher than where it is today. And, you know, what happens to that calculation if it's 10x or if the multiplier affects 20x? Things get ridiculous. So, again, I'm not the first person to come up with a really big number for value in Bitcoin. I've gone a different way. Peter Dunworth, another Australian, by the way.
Yeah, what are you guys drinking down there? What's in the water down there, guys?
A lot of barbecues, a lot of shrimp on the barbies. But Peter gets there a different way. Peter says, okay, assume that all of the Bitcoin is locked into the hands of people who don't want to sell it. So that's Michael Saylor's, that's BlackRocks, that's nation states. Imagine that the 21 or the majority of the 20 million Bitcoin that's mined today, the majority of that, 99%, is locked into people who don't want to sell it. And I actually think this is a very realistic scenario for like 2035. I think that's when we get there based on current trends. Then Peter looks at how much economic activity is done every day. From memory, I think there's something like $6 to $7 trillion of economic trade done per day. And if you're trying to value Bitcoin, you have to, if we're on a Bitcoin standard, that's the caveat. If you're on a Bitcoin standard, that's $7 trillion of economic activity. It has to be facilitated by the Bitcoin that's mined every day. So today there's 450 Bitcoin mined a day. In 2028, that's going to halve to 225 Bitcoin mined every day. And the numbers get even more crazy the further out we move into the future. So there are multiple different ways to value Bitcoin, and there's multiple different avenues that I can get to a Bitcoin price tag around 1 billion and even up to $7 or $9 billion per Bitcoin. And that ignores hyperinflation. That's the biggest thing.
In today, wait, caveat, in today's dollars?
Yeah.
That's insane. Okay, hold on.
Tomato time.
Well, let's I don't want to do good cop, bad cop here, but let me think through this here. So one of the assumptions you're making is that by 10 years, 2036 here, you think that global wealth is going to expand by 10 times. That's one of the basic assumptions, right?
So I have another slide for this. So
you're like, no, I'm actually more bullish than that.
Let me walk it through. I think we're living through the third big transition.
I agree with this. I agree with the basic premise. I think that's a really good framework that no one really talks about. Everyone's crashing out on the timeline of this because they're like, in whose lifetime? Like, yeah. We can make crazy numbers and predictions of $7 billion Bitcoin in like 100 years. But if I heard you correct, I think you said in 10 years. And so I'm trying to wrap my head. You're thinking we're going to be 10 times more productive in 10 years.
Let me walk you through it. So the first big transition, it took us about 2,000 to 3,000 years to move from hunting and gathering societies into agricultural societies. Again, I've got 20 charts covering this thesis, so apologies for the lack of visuals. The first transition was 2,000 years. The next transition from the agricultural age into the industrial age, this played out in pretty much 200 years. So this was a step function lower and a step function faster by a factor of 10. And then the next transition that we're living through now, I think it's probably going to happen 10x faster than the previous one. So my fundamental thesis is 2020 was the inflection point. There is so much data you can look at to show that the world has fundamentally changed post 2020. This marked the beginning of the second stage of an 80-year long-term debt cycle. A lot of people know that we are in that final 22-year chapter of the fourth turning. If you want to look at the 100-year global reserve currency cycle, the 2020s is kind of the decade. I could go on and on with this. But I think like if you look at 2020 as the inflection point, I think everything's going to shake out by 2040. Like that's kind of like my, again, conservative timeline. And I know that sounds crazy, but have a look at how quickly AI has pretty much made like entire industries obsolete overnight. Like I don't know how many trillions is dedicated to like law firms around the world, but AI in less than 2 years has made all of that just vanish. It's gone. And we're going to see the same things with, we've been talking about this a lot this week with Nico off camera, but like AI and technology, and more importantly, entrepreneurs and YouTubers are literally creating $200 million films with a $500,000 budget.
Yeah.
So like this, like, again, if you try to, the human mind doesn't understand exponentials, especially mine. But if you look at what's happened in the past 2 years in broader tech space, try to extrapolate that out 5 years. It's incomprehensible.
Yeah.
It's really difficult to know how many jobs are going to be taken by AI and how much more productive the rich are going to get. A further kind of point to this, like I'm making the case the next 100x in global wealth just started in 2020. Look at how quickly we've seen the rise of teenage millionaires. This is a new trend. Like this isn't something that we've seen for the past 20 years. In the past 5 years, teenagers creating a TikTok shop or an online business are going from $0 to $1 million nearly overnight. Like they're showing you the next 100x is in the digital age. You can also see this with the richest people in the world. So if you look at the 10 richest people in the world, what do they all have in common? Elon Musk, Bill Gates, Jeff Bezos. What do they all have in common? They created a digital age business. Elon's a goddamn trillionaire right now. What are they showing you? They're showing you the next 100x. It's in the digital age. And it's the same with the nomads. So if you look at I was running some numbers on this yesterday. I think there's somewhere around 50 million digital nomads around the world. There are so many digital nomads that they would be something like the 31st largest country in the world by population. And what's really interesting is their average income is like $150,000. So think about, let's pull up that chart that I brought up a second ago. I had a chart looking at global wealth and in particular, which countries. So in the blue line on this chart, this
Here,
is...
hold on, Luke. Let me full screen this because the chat, I think, can't really see it. So, all right, there you go. Continue.
So the blue line here is looking at the average income of the top 38 OECD countries. The average income is $38,000. Digital nomads already have an average income of $150,000. They're already 5x richer than the richest countries in the world. If you look at the red line, this is the global average wealth per person. That's at about $15,000. So digital nomads are already 10x richer than the global average. So like, I don't know where this ends, but I think we're in the very early stages of that next 100x in global wealth. I tried to give a presentation on this recently in Prague, and it was literally 138 slides. So apologies if I've not done the best job at distilling all that information into 10 minutes. But that's kind of like my big picture framework for where we are and how we should be valuing Bitcoin.
No, I think it's whether you think Luke is the most stupidly bullish person ever, and stupid as in like, not like how the cool kids say, like, damn, that's stupid, like as in cool. Stupidly bullish as in like, yo, he's lost his mind. Everyone's like, Luke's a madman.
Wildly autistic.
Oh, yeah, more like wildly autistic, but not mildly autistic. But I think it's a very interesting framework because, again, it's hard for us to really think about what's going to happen in the future. It's hard to us to really conceptualize where we are in the current moment of history. And, if we really kind of look through the history of time or, look through the lens of history through time, it is interesting when you start to realize that things have been going extremely fast. And look, I'm getting older now, and I think we all have this phenomenon where when you were a kid, like summer lasted forever, right? Excuse me, hold on. When you're a child, summer seems like a lifetime. And then your 20s, like they lasted a while. I'm in my 30s now, and I'm like, dude, I swear a year is just like going by in a blink of the eye. And I can only imagine what happens in, another 30 plus years. It might be like a year is like a weekend at that point. It just goes by so fast. You blink and then you wake up and you're another year older. And whether that's like a fundamental phenomenon of how human minds work, it is interesting that it's a phenomenon because you have the data to show like, hey, things are happening a lot quicker. The way humans have learned and evolved are happening at a quicker pace than we've ever seen in any time in human history. And so I really do just love the framework in general. I think it's an awesome way to look at things. Now, will this happen? I don't know. Look, I am bullish as anyone. Luke might be a little more bullish than me, but you at least are able to make your case about it and what you see is happening. And I guess even if your bull case only ends up a bear case, it's like, you know, shoot for the stars. At least you end up on the moon. So, hey, in 20 years, anything can happen. And while you were going, it just kept reminding me of we overestimate what we can do in 2 years, but we underestimate what we can do at 10 years. And part of, I think, people's knee-jerk reactions against what you're saying, Luke, is that a lot of people are really not bullish on humanity, like for the future. A lot of people have this view that, you know, like it's over, society's done, you know, humans are tapped out at their potential. It's all downhill from here. It's never going to get better. And this is, I think, why I love this, you know, this thesis, the Luke Bulltardation here, is because it is a hopeful view. Even if you're, you know, even if the numbers are wrong, even if you overshot it a little bit, the fundamental thesis, or at least the fundamental drive of this, is like, I am hopeful on humanity. You're like, I think it's going to get better, and we are a part of that world getting better. And hey, you know, what's the Steve Jobs thing? You know, shouts out to the crazy ones because they're crazy enough to think that they can actually change the world. I go even further. I did the G Money rug pull radio, and the whole conversation was like, you're better off thinking that you are a winner and the world's going to get better than being a pessimist and, you know, I can't change anything, I can't do anything. It's like, no, I fundamentally think that the world is going to get better. It is a little dark. It is a little scary right now. We don't know where the future's going, but I am team human. I think we'll figure it out. I think we will be more productive. I think things will change for the better. You know, we're maturing a little bit, and we all know that when you go through the growing pains, like it hurts a little bit, but then you get past it and you realize, hey, you know, it wasn't that bad, and life is actually improving, and I'm actually headed in the right direction. So anyways, little rant, little tangent. Luke, I do know you have to go to dinner here soon. So is there anything you want to add on top of this?
I want to build on what you said, Opti. I think it's really important because the world is so nihilistic right now. I think my view, it's not a utopian view. My view doesn't rest upon the assumption that 70, 80, 90% of the world is going to end up using Bitcoin. I think we reach all of those crazy numbers, and my base case still remains the same. Bitcoin's going to be worth millions of dollars, $10 million, and it's going to do it with global adoption at less than 5%. And I don't want that. Like, I want the little guys. I want people from all around the world living in poor countries, tyrannical countries, authoritarian countries. I want them to all buy Bitcoin before it gets to 1 million. But my base case is they won't. My base case is that, like Michael Saylor has said, the 10-year digital gold rush has started in 2024. We're 2.5 years into this digital gold rush. We are living in a world where there's a lot less Bitcoin left on exchanges. If you just map out what we've seen from 2020 to 2026, and you extrapolate that forward another 6 years, I hope that the little guy adopts Bitcoin before we see that next really big move. But my base case is we won't. And my base case is we're going to see something that we've never seen before. I kind of touched into that. But what I think we're going to see is we're going to see a bifurcation. What we're going to see is we're going to see some really weird things. Like, a lot of people look at the K-shaped economy and they're like, they don't know what's happening or why it's happening. But what's really interesting is this isn't the first K-shaped economy we've lived through. We actually saw the first K-shaped economy between 1790 and 1840. There was a 50-year period known as the Engels pause. And again, what's familiar about those years and those dates? It was as we were living through the Industrial Revolution, as the world changed more dramatically than we ever saw before in history in the 1770s. The everyday person who was used to building these agricultural-based businesses and jobs, they didn't adapt and adopt the new technology. And this 50-year period of the Engels pause, it was a period where average wages declined for 50 years and productivity went up. It was the original K-shaped economy. And it's my fundamental thesis that, yes, we've been living through a K-shaped economy for the past 6 years. The rich have been getting rich and the poor have been getting poorer since the 1970s. And we all on this channel know that that's because the money broke in 1971. But there's another big fundamental thesis and part of this story that most people in Bitcoin don't talk about. That K-shaped economy, it's going to accelerate and widen because I've laid out and like what happened in the 1800s, I think that's going to repeat in the 2020s, 2030s, and 2040s. Now that sounds pessimistic. And again, I'm short on the masses. I'm hopeful, but I just don't think they're going to get it. But what that means is there's great opportunity for those who want to take advantage of the new technology. If you want to fully embrace the trend that we're moving into, you can do it, and it's not that hard. The book, The Sovereign Individual, it's the best book. I've read it like 3 times. Everybody should read it. And they say that there's going to be space in the world for 100 million sovereign individuals. It's kind of crazy that there's 50 million digital nomads today. That's kind of like I think there's put it this way. I think the online economy and the digital age, it's going to be a blue ocean for the first 100 million adopters. So there's a really cool book, Blue Ocean Strategy. And it essentially says, like, if you want a successful business, you want to create a business where there's no competition. You're a shark, you're a fish, and there's no sharks around you in that ocean. Blue Ocean Strategy. And I kind of look at this transition in the same way. So my whole message is like, look, you can take advantage of this transition, but just holding Bitcoin, you might be okay, but you're not going to thrive. Okay. And if you're living in a London, if you're living in a Sydney or a Melbourne, or a Vancouver or a Toronto, like, I would seriously reconsider that, because my whole thesis is the same way that we saw the Renaissance men in the 1600s. I think we're seeing the emergence of the digital Renaissance men today. The digital Renaissance men, they're not just using Bitcoin to protect their financial sovereignty, but they're going and stacking multiple passports, and they're living in a tax-friendly jurisdiction to regain their geographical sovereignty. And then the digital Renaissance men, they're also creating entrepreneurial sovereignty. Because in this transition, if you're working a 9-to-5 job and you're dependent on the state or a bureaucratic corporation giving you a paycheck, you're also not sovereign. So this is where technology, like the original Renaissance men exploited, go and take advantage of the new technology. Learn how to create money online and protect yourself in all 3 facets of sovereignty. So again, I could talk for another hour on this. I won't. I'll pause now. But
That's called motherfucking boy.
I haven't heard that one before. I think
It's been a while. It's been a while.
we're living through a big transition. That's if we wanted to summarize my tangents.
I haven't played that one in a while. The 300 a woo.
Bear market rallying cry.
Yeah, this is bear market rallying cry, guys. Stack the sats. We will survive the bloodbath, the bloody Wednesday that we are a part of. Honestly, look, my last thing I'll say on today's price kind of drop. I was telling Luke this morning, Me and Luke has been going back and forth on where we are with the current price. And excuse me, before we made kind of our last leg down around the Sailor sale, we were talking like, oh, you know, the price doesn't look that good. Like, I'm not feeling that bullish. And then we dropped. And now we're at what, 58K or 59K right now. I haven't looked at the price as we've been live, but I'm starting like, the life's coming back into me. You know, I don't know what it is. Maybe it's because I was born in the 2018, well, really like, you know, built up what I understood Bitcoin to be and my conviction in Bitcoin in the 2018 bear market. But when we start to get to these big price drops, when we start to get closer to the bottom, I start getting more excited, even though I'm feeling more pain. I'm like, oh yeah, I remember what this feeling was like. You know, a lot of people are afraid of the emotions. And at this point, I'm like, oh, wow, I forgot what this felt like. It feels so good to not be dead inside because the price has been going sideways forever. It's like, let's just get the final flush going, you know, stack the sats. We will be okay on the other side. We've been here before. And if this is your first time, this is Luke and ours job as being the Sherpa here and show you guys, look, when it hurts the most to buy Bitcoin is usually the best time to be buying Bitcoin. So everyone else has had their fun. Gold had their fun. The AI stocks had their fun. SpaceX IPO had their fun. We're still waiting in the cut, all right? We're still on the sidelines, but we will have our day once again in glory. We will make it to Valhalla here soon. You know, we'll make it to the promised land. All right. Anyways, Luke, I know you got to go. Great rip. I think, you know, you probably destroyed some people's brains and they thought, man, this guy is a literal idiot. He is too bullish. But hey, you know, maybe the numbers are wrong, but I think the thesis is sound. And I love the optimism and the positivity on today's shows, Luke. So anyways, Luke, have a good dinner. Enjoy yourself, and we will have to do this again. Maybe we'll have to do this when we actually start going up and we could just get even more stupidly bullish. So, you know, maybe Luke's going to take a hiatus for a couple of months until the price comes back up. All right, Luke, have a good one, man. To everyone out there, you already know the deal. Get outside, touch some grass, eat some good food, call your loved ones, get a workout in, you know, unplug a little bit, but most importantly, stack some Bitcoin and take it off the exchanges. We will see you tomorrow for another show of Simply Bitcoin Live. Everyone go follow Luke Mikic on YouTube. I forget, what's it? Luke Mikic 21 on Twitter, right? Okay.
Nailed it.
Let's go. All right. Peace out, guys. We will catch you on tomorrow's show. Have a good rest of your day.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.